Hello there, I'm Eric Peckham, and this is the Monetizing Media podcast. As with my Monetizing Media newsletter, my goal is to dissect business opportunities across the media, entertainment, and gaming sector. I'm joined by a leading entrepreneur, executive, or investor in each episode as we dig into a case study on their company, an investment thesis they have, or other tactical insights on business models, pricing, and creating loyal fans. Joining me on today's episode is my friend Pippa Lamb, as we discuss one of her big investment theses right now, the verticalization of social media. Pippa is a partner at Sweet Capital, a seed-stage VC firm dedicated to consumer mobile startups that was launched by the founders of the massively successful mobile games company, King. Pippa splits her time between Sweet's offices in London and Los Angeles. She previously worked at L. Catterton and JP Morgan and graduated from Oxford and Harvard Business School. Well, thanks for joining me today, Pippa. I'm excited to chat more.
I'm excited to chat. Thanks for having me, Eric.
You've brought up this investment thesis you've been pursuing of the verticalization of social media. And I'm excited to dig into it more with you today. In a way, we saw this in the early days of social media and online communities, a lot of very clustered, interest-based, whether it's forums or more niche kind of social communities online. And that gave way to these massive generalist platforms like Facebook and Twitter, et cetera. So it's interesting now that you see a cycle happening of shifting back to that. Tell me a little bit why that's happening.
Yeah, it's really funny that you mention it, because actually, as you contextualize it historically, we've gone from a position of, internet 1.0 when you had, forums, the Mumsnets of the world, like the very, niche communities who clustered around certain topics were then kind of displaced by, as you say, these quote unquote, like giant networks, which effectively were, acting as kind of directories. So I think one theme that we've been tracking that I think is almost, as you say, going back to that initial clusters of interest groups, is this verticalization of social. In this, I think, first chapter of the social network, it was very much around, breadth and volume. Platforms at some level were, a virtual directory for having as many people as possible, after which users are expected to filter down their network to, smaller interest groups or specific communities. So kind of, as you say, a reverse of kind of how the forum had originally begun. But I think, why that's changed, there's several reasons. I think that there's a little bit of just exhaustion around some of these more general platforms. I think that type of, extreme volume on a network has just stopped serving its consumer in a way that is really effective. There's too much noise that comes with that amount of breadth and volume. Consumers have been overexposed, over advertised to, and now they really only want to spend quality time with the communities that they care most about. So yeah, from an investment perspective, and a market watch perspective, what that has meant for me is looking at platforms that are, again, built for specific or niche communities. And I would just, caveat here that, niche does not mean small. It means focused. It means offering the users, greater depth and connection. It's kind of a trust thing. It's much more about authenticity versus volume now.
Yeah, it's interesting. I wonder if part of this is just a kind of aging with the next stage of the internet, or having had this period of time where we were just so fascinated by the concept that we could all connect in the same place online, right? And everyone we meet, we could add them on Facebook or wherever else, and stay connected with them forever. And perhaps the novelty of that is wearing off, and it just seems kind of unnecessary or silly, right? And there's kind of this pendulum swing back to our core relationships.
Yeah, for sure. I definitely think that's a part of it. I think that there is, a maturing of this, of the social networks themselves, but also how users interact with that. And as you point to, there was perhaps this novelty of everyone being listed in a directory somewhere. And that's kind of shifted. I think that at some point, Facebook in particular decided to sacrifice being niche and designed for its original user base of students to really be a land grab and kind of a yellow page or a directory for everyone in the world, and I think it's very hard to balance both a function of intimacy with that desire for, land grabbing, volume and breadth, and just having everyone have an online profile. And I think that, vertical can also speak to function, right? So it's not just simply about vertical as user groups. So, one example I'm happy to chat about is a company called Peanut, which is a social network for women who are going through different life stages. Another company that I've worked with is vertical in the sense of its function. So the individuals are from a very wide demographic, but they're coming to that product with a very specific function or use case in mind. That they're not currently able to find elsewhere on, say, for example, a Facebook or a network that has such scale. So it's more about being specific and deliberate about either the group or about the function, and not trying to be everything to everyone.
Yeah. Talk to me more about whether it's Peanut or some of these other vertical social networks that you're seeing pop up.
So just to give you a bit of context, so Peanut is a company which is a social network primarily for women going through different life stages. Now, that could be anything from the fertility journey, motherhood specifically, or even menopause. And I think the easiest way to think about it as it relates to vertical social networks is how Michelle Kennedy, the founder of Peanut, describes it. In her words, like, we can't expect women to use the same platform that their Uncle John uses to share his holiday photos, their teenage cousin uses to sell his Supreme sweatshirt, as the same platform that they're going to be on and talk about their miscarriage. There's just fundamentally a disconnect there in terms of why you're drawn to a product and the function that it's serving. So I think in that way, this speaks to a little bit about what we were saying earlier about how, we as users have matured along with the networks. I think, the function itself of consumer social has evolved from, something which is purely transactional or directory like, storing your photos, to something that's actually more like emotionally engaging. It's less about transactional value, as I say, but, the psychological relationship you have with people in that community. And that only really works if you can go at depth. I'm a big fan of Clay Christensen and his disruption theory. And I find that one way to think about it is, what is the job that's being done by these social networks? Generally, there's like a functional, there's a social, there's emotional dimension. And if you think about that with consumer social, the quote unquote job to be done of these consumer social companies has changed quite significantly over recent years. So just going back to Peanut, functionally, Peanut's job to be done, or the reason that users are hiring Peanut to do a job for them, is to connect with other women. It's far more powerful than purely the functional, where perhaps in a Facebook you're just wanting to keep track of who you've met or share a photo. And that's why I think that vertical network's powerful, because as a result, you're really solving for that, depth and quality of interaction. You're not competing with simply other online directories, but maybe like hanging out with girlfriends or having a heartfelt chat with a family member, or even like a therapy session. The role that Peanut can play psychologically in its users' lives is just far more substantial and therefore valuable to us as investors than something which probably just scratches the surface in terms of engagement and retention.
What's the role going forward you see for the Facebooks and Snapchat, the generalist or broader based social networks? I mean, do you see this as they will decline? There's kind of a cannibalization into amount of time spent on them, or they still have a role? And how effective will they be at competing in this? Obviously, Facebook has made a big push into Facebook groups, I think, recognizing to some extent that these changes are underway.
You know what? I think it's really tough, because I think that a lot of these networks, as you say, are trying to backpedal. Taking Facebook as an example, they really made a conscious decision to sacrifice depth for breadth. And once you've done that and you've created that psychological relationship with your user, I think it's very difficult to return to a place where you actually have that intimacy that some of these other instantly vertical social communities can create from day one. Again, going to that example that Michelle from Peanut gave, you're not, if you have historical association with the platform being somewhere, your uncle shares his holiday pics, or your young cousin is selling whatever, the Supreme jumper, then it's not going to be the one that you think of going to when you've had a really traumatic experience. In her example, perhaps a user has suffered a miscarriage. So I think it does leave the Facebooks, the Twitters to some extent, in a bit of a tricky position. And I think actually Facebook is more exposed to this than Twitter, which I would say is still, relatively more confined along a specific function, versus Facebook, which is trying to be everything for everyone. So I think the clue is really in their M&A strategy. If you look at Facebook's history in recent years of how it's gone about making acquisitions, a lot of them have pointed to acquiring what they perceive to be very fast, threatening, growing vertical communities, either clustered around a user base or a function. Mm-hmm. And I think, their acquisition of WhatsApp is an example of that, right? One of the important KPIs for social networks is how much media or how many photos are being shared between users. Now, for Facebook, as somewhere that's always been a place for friends to share and comment on photos, it's rumored that around the time of the WhatsApp acquisition, there were more, let's call it media, be it photos, voice notes, etc., being shared on WhatsApp than there were on Facebook and Instagram combined. Wow. So for Facebook, they really needed to basically acquire WhatsApp and put a stop to that growth of media sharing, because that's Facebook's KPI for growth, or at least it was at the time. So for me, I think, look, they're in a really tricky position, and that's why I think we're certainly quite bullish on how M&A is going to take place in the space. It's much easier to buy or acquire a community than work from a very general community and backtrack into something that's extremely niche. Just looking at how Facebook's tried and failed is evidence of that.
How do you look at the relationship between niche and private in talking about whether it's a social network just for women, a social network like Strava for cyclists, etc.? What's the relationship between great, anyone can join, this is just about shared interest, versus part of this is actually in some way having curated community, which perhaps is more of what Facebook sought to attack with Facebook groups?
Sorry, privacy in the sense of
private in the sense of not anyone can just download the app and join the conversation or see what you're posting. The idea that there's kind of a private community that you define.
Got it. For me, I think a bit less around privacy. I mean, I think that there are really interesting examples of that at the moment. I know you've had in a previous episode, you've talked about Clubhouse. I think Clubhouse is a very recent example of how do you balance, and look, it's super early stage, but how do Paul, Rohan and the team balance scale and exclusivity? So I think maybe a bit less as privacy, but how do you scale something who in some ways core value is derived from some form of exclusivity or privacy, if you want to define it that way. I think the other conflict or contradiction that you sometimes need to balance, and we've mentioned in a previous discussion, is how do you balance being a niche community with liquidity, right? And I think that it's a balancing act. You need enough people who want that, as I used before, job to be done, for there to be enough liquidity to build a community around it. Ultimately, if there's not enough liquidity or the community isn't big enough, do you really have a product there? And I would say it does vary a lot between social categories. I think the most clear example of where this can be a real conflict is the dating market, right? Dating apps. Liquidity there is a constant struggle. And if you look at categories where verticalization of social has struggled, dating is definitely one of them. I'm really interested to see how this plays out, because I know from speaking with founders in the space that there are vertical communities that have not yet been fully served by existing platforms. Just last week, I was speaking to a founder who is expressly focused on building connections platform for people of color. being shocked at how dire her own user experiences were, being segmented on the algorithms pushed out by the main dating players. At some level, dating, liquidity is a real issue. And I think it helps to think, when you're going through different categories, how is the quality of this product being judged? And for dating, by definition, you do need volume and breadth. Whereas on the other hand, there may be communities which are less about breadth and more about depth. Going back to the peanut example.
In thinking of other types of media like publishing, when you anchor in depth over breadth, it also tends to go in line with a change in business model from kind of dependence on advertising to incorporating, if not entirely focusing on subscription or other audience revenue models where users are paying directly. In looking at kind of different startups focused on a niche use case or demographic and engaging them very deeply, how does it change what you're seeing as a successful business model?
Yeah, look, I think that for any consumer social business, your monetization really depends on both the function and demographic of your user base. Traditionally, you're going to have something which is a combination or a choice between subscription, you're going to have a freemium, you're going to have something which has in-app purchases, and it's really hard to give one hard and fast rule for all. I think that speaks to whether it's something that's hyper vertical or something that's more general. The DNA of Sweet Capital was obviously gaming, and I think that using the example of Candy Crush, which was obviously one of King's its most famous product. It was a really interesting choice there between, how do you balance your monetization strategy to really fit around the type of user dynamic you're having. And for King, it was all about not, quote unquote, capping the whales, particularly in terms of how we look at companies and how we judge things like payments or monetization relating to consumer social. We do borrow from gaming a lot. And there are a lot of similarities with how you monetize.
Talk to me more about how you are evaluating the startups within this thesis that pop up, and how much of the metrics you're looking at, the consumer behavior, comes from similar sort of analysis with mobile gaming companies.
I think we've talked a lot already about how, what is the psychological role that this product is creating for the user, and I think that's tied very closely to how we track or analyze a product. Number one top metric we look at is engagement and retention. What does that mean? And I can give you a rundown of or kind of hit list for each KPI, but at its most basic, it's it's about user love. How sad would users be if this product no longer existed? What type of relationship do they have with the product? What's user psychology? What role are you fulfilling in their lives that was previously partly met, mostly unsuccessfully elsewhere? We'd much rather see a product that has limited users, but with high engagement, than a product with lots of users and low engagement. So, specifically in types of ways that we track this, there's the usual retention cohort. How often are your customers coming back on a 7-day, 30-day, 90-day basis? Industry standards say 30, 40% at the lower end of best in class. But of course, again, it depends slightly on the type of category that you're looking at.
Is that 30 to 40% for 7-day or 30-day or 90-day?
That's typically around the 30-day. And we invest really early. So sometimes, products don't actually have enough retention cohort data for us to go through yet. So another great way to look at it is take your top 20% of users that you've got so far. This is the early indications you have towards who are going to be your core audience. What is their average session length, session time? How much content do they go through? One company we looked at, they'd only produced 1 hour of content, and they were testing this out with users. What was really exceptional there was that 50% of users were completing that 1 hour of content within a day. And I think even more than that, were completing it, within something like 3 or 4 hours or in one sitting. Now, we're looking for kind of standout KPIs. It could be that, it could be, your 30-day retention that show that there is something exceptional in how users are valuing your product. ultimately time is your most expensive asset. How quickly and how early can you tell that, how much users are willing to give up their time to spend on your platform? And then I have a few other, there are a few other ones that I'm happy to cover. What is your viral factor? Put it this way, for every user you're acquiring, how many new users do they bring? What is your organic growth? We talked about this with Facebook, and for them it was sharing media or sharing photos, and they noticed that WhatsApp was creeping up and actually overtaking them. At some point, for every friend you add on a social network, that's going to help you retain better. So, and that can look very different. There might be a social network where if I bring on 2 friends, that's enough for me to actually stay on for, the next 30 days and engage with them. For others, maybe you need to actually add, 10 to 20 friends. I don't know what Instagram's is, but for you to retain as an individual, you want to be bringing like 10 to 20 friends at least onto the platform. So
yeah, and you measure this quantitatively as the K factor, correct?
Yes, yeah, exactly. And it's something that I've certainly learned a lot about from my colleagues who grew up and their DNA is really gaming, because for gaming that's absolutely something that you want to look at: time spent in app, and also how important how many other people you're bringing in to play the game or be a part of the network. And then obviously, last but not least is, you can never avoid the good old ratio of LTV to CAC. I asked my colleague who's responsible for scaling growth marketing at King, okay, give me your absolute best in class, LTV to CAC for consumer social. And he literally was like, infinite. It's less about the absolute number, but I think for us, it's, you're measuring how much can you afford to grow versus profitability. And I think, different companies have different targets for their, lifetime value to customer acquisition cost at different parts. Like maybe at the beginning, you're solving for super high LTV to CAC because you just grow. And maybe later you're actually more concerned about profitability and monetizing, in which case, you may reset that LTV to CAC at a different level. Those are just a few things, and I could literally go on all day. So we'll try to cap my exhaustive list.
No, I think those are helpful and certainly key ones that come to mind, in thinking about any consumer startup, but especially in a social context.
Yeah, for sure.
Well, Pippa, thanks so much for sharing this investment thesis with us and walking us through some of the metrics you're tracking.
No worries. It's been fun. Thanks so much for having me.
Thanks for listening to the Monetizing Media podcast. To keep learning more tactical insights on the media, entertainment, and gaming industry, subscribe to my Monetizing Media newsletter at monetizingmedia.com.